All right, welcome back for another episode of Carnivore Trades. Today is Friday, October 28th, 2022. If not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, another big day for us here at Carnivore Trades. Buying the dip yesterday after hours. And, if you followed me on Twitter, it was, we talked about this. Bonds and the VIX were telling you that the market already kind of made its mind up here. Amazon obviously crapping out on earnings. Apple doing pretty well. It sold off initially. It's like investors weren't even looking at the report, didn't really care. And we got a nice reversal. That level I showed you yesterday on the ES here has held. And I talked about that live in the video yesterday. I said, look at that 4-hour level. 200 moving average, 50 moving average convergence, and then you have these trend lines also converging right in that same vicinity. And another case of the charts just, telling you what was going to happen regardless of the news. If you waited for the news to come out, then you shorted the lows and you got hosed today. So, ES having a huge day here. We're above 3,900, which is the level I've been talking about for a while. And one thing I will say, though, if they push us back down, so we're bidding up pretty nicely here, we're squeezing, and it makes you wonder how many people shorted that earnings announcement, those earnings announcements after the close yesterday. But either way, if they push us down back below that by 4 p.m., and we're going to look at the SPX here too, because the SPX is a little bit has a little bit lower print than the ES. That's only at 3,900 versus the ES is at 3,910 or whatever. But if they push us back below this before the close, that would be red flag number one. So, and I just mean that as far as in the near term. This is still a bullish day. All things considered, we have a really nice pop. There's really nothing to take away from it, but that would be a little bit of sign of weakness. Like if the bulls have such good control, which they've appeared to have maintained so far, pretty much all day long, then you'd expect them to follow through and at least get us above that level. Remember, I think it was a few weeks ago. It might have been here. I believe it was right here on this day here where I said, like, hey, they couldn't get us back above. I think we were looking at the spiders at the time, if I'm not mistaken. And yeah, I think it was this day right here. So I said, like, going into tomorrow, I'm kind of, it's a red flag because we couldn't get above 370.62. We closed at 370.53. 9 cents. They couldn't get us 9 cents higher, and that was a red flag. And you can see we dumped out the next 2 days. So that would be kind of a little bit of a red flag going into the weekend. Additionally, what I want to see as well for the spiders and for the SPX, ES, etc., is I'd like to see a weekly close above the 20-week moving average. Currently, we are just right, literally right on that. You can't be any closer than this. So it's going to be a little bit of a battle into the close. It looks like, but 388.70 right now we're sitting at, and that moving average is 388.95. So we're right there. The SPX, I believe, yeah, that's right at 38.99.75. Look where we are right now, 38.98. So it's going to be a close call, and it does matter. Believe it or not, it definitely does matter psychologically, and it matters for the bulls because they need to slam the door shut. Right? This is a statement rally today. Right? They need to slam the door shut, and they need to not give the bears any sort of hope. That you got to put your foot on their throat and strangle them. Essentially, that's what we're talking about here. But in any case, flipping back over here to the spiders. Nice rally day. People were panicking yesterday. Everybody was dunking on Meta, dunking on Amazon, dunking on Microsoft. They tried to dunk on Apple. They didn't even read the report. And that's where you're going to find those opportunities. So nice move here for the bulls, and we'll respect it. I do think we hold up until the election. Again, I've kind of mentioned that sentiment lately. I believe the verbiage in the Fed statement will include that of pause talk. That does not mean that that's long-term bullish, but short-term, that will probably satisfy the market and keep us up into the election. I think that is what they really want here. We've seen what they've done with oil, with natural gas. By the way, we just, in a few hours, took a chief target one on Boyle here. So that's the second time we've played this in the last week and made money. We're still leaving a runner on there, but huge gains for nat gas in Carnivore Trades. You got to come find me here. We're killing it this year. But anyways, keeping us up into the election. And again, I talked about that inverse head and shoulders, right? So there's that neckline. And where does this line up? Well, we have it on the SPY, but I'll show you here. And I'll show you the 4-hour channel I've been following on the ES. You know, that goes right up to that 4,000 handle, which is where that target is. And if we look at the spiders on the daily, and if I flip over to these other lines, sorry, it's kind of a mess right here, but here you go. You see these other lines? So there's your inverse head and shoulders. There's your head and shoulders. And that target is right around 400. So you could back test theoretically that trend line as well as that area on the ES right around that 4,000 handle and simultaneously satisfy this target of this inverse head and shoulders, or at least get in that vicinity. So that's where we could go for certain in the short term, or not for certain, but it certainly could be a possibility, I should say. And I could definitely see that lining up in the next 2 weeks, especially if the Fed starts mentioning pause talk. And yesterday you just had kind of a little bit of over bearishness. And what the market's looking at is, well, terrible earnings, right? We had some bad economic data, bad housing data this week. That's actually a net positive right now for the market because it basically increases the odds of the Fed backing off, maybe only doing 50 basis points, maybe doing 75, but then saying like, hey, we're going to reassess. And if they change their verbiage and they change their, their tone, that's going to affect the market. The market will like that. By the way, Boyle's still popping up here, getting a really nice bid here at 35.55. Nice gains there. Anyways, triple Qs here up just under 3% on the day, so back above that 280 level. So nice move there for the triple Qs. Again, they are still weaker, and big picture, the NASDAQ is still lagging. You know, it's not as much off the lows as the spiders, but in the short term, that can be okay. In the big picture, the Dow is leading right now. That's all the way up to its 200-day moving average currently. So that's actually above that, and almost all the way back to that 331 level, which is a level I've been following for quite some time. I've been talking about that pretty much all year long. Is kind of like a base pivot point, home base kind of trade there for the Dow. But again, you don't want to see the Dow lead. You want to see the NASDAQ and the Russell leading. By the way, the Russell today, not really showing a whole lot. I mean, it's getting a nice bid, but it's nothing like what the spiders and the Qs are doing. So you can see intraday there, it's just kind of choppy. And, you know, it's getting a bid now in the after hour, or in the afternoon session, but spiders definitely leading the charge here. But anyways, market's up. Market's liking this kind of, buy the rumor, or I should say buy the news type move here on the FAANG earnings. Semiconductors here up 3.37% on the day. So you could make a case you have an up move and you're starting to flag here. But more importantly, you're going to get a weekly close above the June lows. So that is important, unless they have a miraculous sell-off in the next 50 minutes. This will close above the June lows on a weekly close, so that should give the market a little bit of a bid. Next level here, 195 and then 200 right in that area, gap fill on the SMH. Intel kind of leading the charge today, up 10%, up to that 29 handle now, and right into that 50 moving average, obviously reporting yesterday, and market is responding well. IGV also getting a bid, same kind of pattern as the semis, up move, a little bit of sideways consolidation. So this is in decent shape right here. It could get above this trend line. I would not rule that out, but I don't see it going that much higher. I mean, maybe 280, 282 if you really start to bid up, but I don't see a whole lot of upside here on IGV. But, regardless, it is getting a little bit of a bid, so we'll respect it. Dow Transports, up 1.35%. Now, definitely a lot softer. So I'd like to see the transports take a little bit more leadership, but for what it's worth, you do have a nice 4-hour inside bar below the 200 moving average. And, it looks like you're going to close back above this trend line here today. So it's showing a little bit of strength, but I would prefer to see it leading the charge rather than lagging. Again, another kind of micro red flag here in the short term, but Dow Transport's up today, just like everything else. Interest rates. So strangely enough, the 10-year is actually higher today, 10-year yield. And that tells me that this market, the move we're seeing in the spiders goes back above 4%, by the way. But that tells me that this market, the move here, is more mechanical. Just too many people shorting and getting too bearish ahead of earnings. But this is still a problem. So the 10-year being up, 30-year being up as well. TLT was green for a minute today and then came back in. The 2-year, every day I talk about this thing. Look at that engulfing reversal on the 2-year, down 20 basis points today. So again, Short term, market can have some upside. Big picture, bonds are still telling you, no, it's not, this isn't what you think it is. But for now, the market's hanging in there, but interest rates are a huge problem moving forward. And, again, I've talked about this. The Fed may use some pause verbiage. The market will like that short term, but they're not going to pause if this thing keeps selling. So just keep that in mind. XHB, nice bid. So that's going to close above 58 on a weekly basis. So that's holding in there okay. Still have that weekly choppy pattern. Same thing with ITB. This is not out of the woods by any shot here, but nice little bid on the day to close out the week. Let's take a look at the VNQ. Yeah, VNQ finally getting a nice little pop here, up 2.5. So I would say this can probably get up to gap fill, 50 moving average. And if you get through that, maybe 87, 87.50, it's going to be pretty good resistance there for VNQ. But again, this was so oversold that, again, you can only stretch the rubber band so far. So VNQ getting a nice relief bid. XLF up today as well. So that's through my 34 level. So that may want to get up to gap fill. You also have the 200 down sloping there. So those are going to be some levels to watch next week. XBD, powerhouse move right through that 460 area. And you can see these little wedges here broken right above those. So nice move there for XBD. Again, maybe it wants to go up to double top there around that 470 handle. So nice move there for broker dealers. Energy here, crude really kind of just soft on the day. It did get through that trend line. We confirmed above that yesterday. No follow through today, but it's holding up well on the weekly, and we'll respect it for now. I don't really have a buy signal or a sell signal on it just yet, but it's hanging in there, and we'll definitely respect that for the time being. Energy, so Exxon and Chevron reported they had a huge bid early pre-market. I am seeing kind of a hanging man here, though, on the XLE, and that can be a bearish reversal candle. So this is up into resistance. It's overbought. It's extended. Needs to pull back. I think energy here is really long in the tooth, and I think it's likely we'll see a rotation into probably some tech here and out of energy, at least in the short term. Big picture, I still like energy. You see XOP backing off of that little double top there. Big picture, I still like energy, but short term, wicked overextended. Over OIH also pulling back a little bit. I think this is headed down to that 260 area here before it really has another move up. Nat gas again down today, but still bidding up here after our entry. I saw this back test of 550, and what really got me into it here, just to show you guys, is just a simple 50% fib. And you got that 200-hour moving average, 100-hour moving average kind of converging right into that 50% fib area. So easy money there, very stress-free, great way to end the week for us. Again, you guys should get in on that. We're killing it this year. Dollar index also green with yields up. So again, that makes sense. And that's telling you that this squeeze in the market today is just a squeeze. It's mechanical and it's not fundamentally driven. So dollar index, what have I been telling you guys all week? Everybody's freaking out. Oh, the dollar's dumping. The dollar massive sell-off in the dollar this week. What massive sell-off? It hasn't even broken that trend line. You broke the trend line the other day, and now we're back above it on a weekly close, and you held this green bar low. I told you guys 109.50 would be support. We got down to 109.53, and we bounced there, and we've held that trend by the weekly close. So dollar index trend is still up. Trend is still intact. That is still strong. Market will need to respect that very soon. Gold here can't get out of its own way right now. I think this is ready for a dump. And then we'll get a good buying opportunity. Again, nothing's really changed there. Silver here, again, in much better shape. Still have a daily inside bar. It's hanging on there okay. Nothing terrible. Platinum just backing off here, but you did confirm above the 200 moving average yesterday. So that, again, dips can still be bought, I think, to 1,000 here before it has to really do some backing and filling. And then copper here backing off as well, but still closing above 340, closing above this trend line on a weekly basis. So it's hanging in there, and we will respect it for now. Flipping over to Bitcoin, and you see the yield curves here. Again, 2s and 10s, not very good there. Not a good look. And 3-month 10-year did back off a little bit, but that's going to close the week inverted, just so you know. Bitcoin hanging in there okay. You could make a case you're starting to flag up. It's still a little premature, so let's not get too excited. Ether, looks like we're going to get a weekly close above that neckline, so that is bullish Ether. So I repeat, that is bullish Ether and probably bullish crypto here in the near term, is that is now a failed head and shoulders, assuming we don't dump out here in the next couple hours. So Ether looks in good shape. Doge is continuing to squeeze up. on the Twitter news, Elon's first day. So, yeah, that's really the extent of that. But crypto is in much better technical shape after months of just nothing here. So that is, I'll give that short term kind of an upside bias here. Big picture, I still think, you still have a weekly bear base here. Like that's not avoidable at this point. But for right now, it's holding up, so we'll respect it. All right, so lastly, let's flip back over here to the spiders. Again, I want to see a weekly close above that level. So above the weekly 20 MA, and on the ES, 3,900. Really, that's the level there. I would say the weekly 20 MA is going to be probably the deciding case here. But for right now, market's holding up. Nice squeeze day, and great way to end the week for us at Carnivore Trades. You guys got to come find me if you haven't already. Anyways, going to wrap it up here. You guys take care. I will talk to you guys all next week.